Suraj? Suraj, can you give us feedback, please?
We're live, Roger. So you want to turn back on?
Yeah. All right. Okay. Welcome, everyone. It looks like we had a bit of technical hitch, but we're all here. I'm Roger Hamilton. I've got John Brda here. Hey, John.
Hey, good morning. How are you?
Very good. We have Wes James Christian here. Hey, Wes.
Hey, Roger. How you doing, buddy?
Very good. Very good. And we also got Mark Basile here. Hello, Mark.
Hey, Roger. How you doing?
Very good. Here's what I want to kick it off, because I'm assuming most of everyone who's on this YouTube Live knows all of you already, but just to give a bit of an intro on each of us and where we are now, 4 months for me into this journey, given that in January this year, that's when I first connected with John. John was one of the first that basically shared his story with me. We had a video that we did on it as well, and the whole story of how Torchlight went into Meta and how MMTLP started. And really at that point, we're only 1 month into the U3 halt, right? So we're now 4 months, beyond that. And so that was a big inspiration for what we're doing with our company, which is Genius Group. And it was actually through basically meeting up with Wes and understanding what was going on with our shares and going public with that in January. So we've been on our own journey pretty much since then. And Wes told me the story of how he has been at this for decades. And it was actually in March, after we had been taking a lot of the actions inspired by John and the actions that he took, that I then connected up with you, Mark. And it was very interesting because at that point, we were basically looking at a case we had, which we've since settled. And it was super interesting to hear how you had been approaching the whole market manipulation side, everything that was taking place from the point of view of discovery on a number of the lenders or brokers, which was actually the opposite direction from where Wes showed up. And we had some very interesting conversations, all of us together, obviously. And then now we have each of us here basically working alongside each other, but also working on our own programs, but all for the same battle as we go as well. I'd love for each of you just to share, maybe starting with you, John, just how, for anyone who may not have heard the whole MMTLP story, how basically you got to the point where we are today. And we'll do the same for Wes and Mark, after which we're going to just jump into what the big developments have been over the last 4 months.
Sure. Thanks, Roger. So for those who really aren't familiar with the story, I'll try to summarize it in about 5 minutes time. But Torchlight was a NASDAQ company in the oil and gas space in a lot of trouble, to be honest with you. When COVID hit and oil went negative, the board authorized me to pursue opportunities that were basically a 180 from oil and gas, with the caveat that we could preserve our oil and gas assets for a rainy day. We finally, in September of 2020, decided on a merger with Meta Materials, signed a definitive agreement in December of 2020, and set about going through the process of actually finalizing the merger. Because Meta was a Canadian company, it was a much more sophisticated transaction and a lot of paperwork and in 3 sets of attorneys, and it was just a lot of work. And in addition to that, during the definitive agreement, we as Torchlight had to basically eliminate 18 million in debt and bring 10 million of new capital into the transaction. And we were successful in spades doing that in February of that year. Then as things were happening in the market, obviously a lot of people were staying home and trading. Our shareholder base went from about 4,000 to when we finally closed the transaction, over 60,000. And what's interesting about that is the number of shares that traded on a daily basis went from maybe 1 million shares to towards the end, 350, 400 million shares traded on a daily basis, which is an impossibility to borrow those shares, as you might expect, because the float at that time was only about 75 million shares. And so if you're shorting, technically speaking, you're supposed to borrow a share. Well, that never happened. So one of the things that in hindsight that through this process after it started trading is that we know and now that in June of 2021, when the merger happened, we want to take a look at how many shares of Torchlight 2 days after the record date were actually short. That gives us tremendous insight. And then secondly, we found out after MMTLP started trading that the OCC Options Clearing Commission actually issued a memo that only went out to their market makers, which is to me a bit of inside information, that they were not going to settle the trades related to the Series A preferred. They were actually going, admittedly, trying to find a way to trade the Series A preferred. Now, the only reason they would do that, the only reason anyone would do that when the shareholders have approved for it not to trade and for it to remain non-trading, it was just purely a placeholder. The only reason to do that is if you're short. Quite frankly, you've got to deliver the right thing. So that happened without the issuer's involvement in some obscure rule that FINRA still hasn't told us which rule that they allowed 2 market makers to file for trading. But they used on OTC markets, which we haven't truly visited this yet, Wes, but OTC markets used fraudulent information about myself and my old team from 2012. And basically, in my opinion, had defrauded people of the correct information on OTC markets. And so we'll be pursuing that as well. But that traded for probably a year and 2 months. And then when the Series A preferred was designed to be a placeholder for the oil and gas assets, and the company, MMTLP, that was in charge, had the option of either selling the assets or spinning them out into a private entity. They chose in December to spin them out, which then caused people to actually turn around instead of potentially MMTLP shares, they started buying. Keep in mind, all of those shares of MMTLP were likely short to begin with because it would have never started the trade had it not been short. So again, people started coming in and buying stock instead of selling. And it just created a huge problem that broker dealers, FINRA, market makers, buyers and sellers never settled. The shares never settled. And so that was a huge, huge problem. And you'll find out later in this conversation about how a lot of this originated over in Europe and how the laws are set up to really fleece the American public if you're a U.S. security over in Europe. And it's just an amazing story that we've been uncovering the onion piece by piece. But along the short of it, in December, when the Next Bridge hydrocarbons were supposed to be issued to all MMTLP shareholders, and we were FINRA issued a corporate action. Again, FINRA's corporate action was not to be opined upon by MMTLP. It was not to be changed. It was handed down from above and said, do not change this, only press release it, which is a very unusual thing. We came to find out later in a FOIA request that they had a bunch of information on the blue sheets of MMAT and MMTLP. In our opinion, is that they were acutely aware that there was a problem of settlement and allowed it to trade for 3 more days before they halted it. Now, when you halt, basically anybody who thought they were going to sell is now stuck. And quite frankly, the other side of that is if you're short, you're now stuck. And so how do you settle those trades? That's what really has to happen. Those trades have to settle. And so here we are 5 months later. Wes and his team have done a great job of doing some research behind the scenes and gathering data. And Mark just recently, through an investor in New York, has stepped in on his front and really through an obscure rule that none of us knew other than Mark, is able to put pressure on FINRA to release information that will tell us who the bad actors were and tell us how offsides they are. And so that's kind of where we stand currently. And it's been just ridiculous, to be honest with you. I will say the community of MMTLP shareholders, particularly on Twitter mostly, has been just really unbelievable how they've approached going after Congress, just getting the word out to media, and it's thousands of people are active on Twitter.
Yeah, John, I'm gonna come over to Wes next, and I totally agree. It's incredible just how much pressure has been put on multiple fronts. With Wes famously said on our investor call that we had in January when we first said to the investors, look, this is what we believe is happening. that there was a motherload of shares that we were going to be seeing, which was relating to MMTLP. And actually, it was after like hearing all of the things that Wes has been doing and the way he goes about doing it, and us going down that pathway, that then John, you then shared together with Wes that you were one of the first investor groups, because obviously CEOs, companies are trying to take action, but to actually for you to come together when you're no longer the CEO of Torchlight and to be saying, right, we're going to be funding this ourselves to basically track and to solve this, which was amazing. Wes, I would love you to share with everyone a potted history of how you got to this point and all the different pieces along the way, because obviously you were involved all the way from the very, very first cases on naked shorting and what's been happening here.
Yeah, so I think we discovered this actually, in 2000, we being John O'Quinn, who was a billionaire lawyer who unfortunately died in 2009 in a terrible car accident. He was my partner initially, frankly, because these cases were just enormously expensive to prosecute. It was a person that we went to church with that said, hey, the issued and outstanding shares are being traded every day, and myself and 4 other guys own 80% of the company, and the shares are in my vault. What's going on? I said, I don't have a clue what's going on. So we started, down that path. And frankly, early in New York, because all the documents had forum selection clauses in New York, we didn't do so well because, the Private Securities Litigation Reform Act was passed in the late 90s. And that means that you had to have specificity in your complaint sufficient to beat a motion to dismiss. So ultimately, a couple of the first cases in New York got dismissed because we couldn't plead it properly. But since then, let's just say in the last 15 years, we've prosecuted these cases, 22 of them now, in state court under state securities laws at state RICO, and in federal court. And of course, RICO got excluded by the bad guys for securities fraud in the late 90s also, which incidentally was about the same time the DTC purchased the NSCC, which was nothing but a stock lending company. Is that a coincidence? I don't think so, but that's for a different day. So anyway, long story short, we were involved in getting Reg Show passed. We hired lobbyists. We joined the American Chamber of Commerce, attorney generals. We filed our first successful group of cases in Overstock. We had a case against Rocker Partners, Mark Cahotis, and others, and then against the prime brokers. That took years to resolve, but you can see some of those settlements, 20 million here, 10 million here, whatever, those are public. We then did other large cases, the Taser Gun Company, that settlement's confidential. We did that under state racketeering in Georgia. We did the Hyperdynamics case and the Razor case, which we were very happy with in Georgia. Those were stock manipulation cases. The Eagle Tech case in Florida, the Pet Quarters case, I could go down the list. Summary version, in the last 15 years, 1/2 of one case has been lost on a technicality. And that's too long to get into. Part of that case went to Utah, and they successfully got it dismissed on claim preclusion, which is a legal theory. And we lost that. Let's just call it what it is. Since then, we've decided to increase our bench. Because of that, Alan Pollack, I want to mention his name. Alan Pollack's my partner in all this for the last 15 years. Warshaw Bernstein is his firm, who are great lawyers. Mark knows him well. And then also in the Northwest Bio case, I brought in Cohen Milstein, who are lead counsel. I want to mention them. Incidentally, they just got $1 billion settlement against Wells Fargo in a class action. Laura Posner's the lead lawyer there, an excellent lawyer, as is everybody at that firm. So they're lead in the Northwest Bio case. So presently, of course, we're working on about 6 or 7 different companies we're planning to bring actions on. Of course, Roger's company, Genius, is one of those, and that's progressing very well, I might add, in what we're uncovering. That's all I want to say, because I don't want to give up our strategies or the details. We have the Harrington case, which we beat the motion to dismiss on spoofing, and we're in discovery there. We have the Northwest Bio case, which again is being headed up by Cohen Milstein. We have the GTII case and several more that are coming. And what's happening, in my view, there's a bunch of attention being paid to this topic, the topic of selling something you don't deliver internationally as well as domestically. And so by the time you count the 10 million Reddit group and Wall Street Bets and Superstock group, and you combine them with all the hype in the States and abroad, frankly, and we can talk about some of that when it's my turn to talk. But that's kind of where we are. That's our journey that we've been in. We've been in this for 21 years. As I told somebody this week when I was doing a case against Disney on a different topic, I'm going to do these cases because it's financial fraud on America, it's financial terrorism on America, it's financial terrorism on the world until I frigging die. Okay, so it's just that simple. It's an Alamo kind of deal with me, like it is with John Brda. Okay, so come and take it. Okay, because basically we're not quitting unless I'm in a box. Okay, so that's kind of how we feel about it.
Thank you, Wes. I think you've been clear how you feel about it. And that brings us on to Mark, because Mark, you're very much like Wes, someone on a crusade. And I was amazed the first time we had our conversations, how you have come from this other direction, right? And whether it's unregistered broker-dealers, whether it's like the RICO Act, it's like you have found all of these really smart ways to be able to actually go out there. And recently there's been some really interesting cases you've been winning as well. And you're right in the middle, obviously, of what's happening with MMTLP and FINRA. I'd love for you to share how you came into this and how you got to where you are today.
Yeah, thanks, Roger. And I think, I got pulled into this more or less because of you, Roger. And I think Roger and Wes kind of recognized our pathway and what we were doing with our public companies. And we represent over 41 public companies. And when we get involved in a case, it's more because of the financial turmoil that bad financing transactions have caused. And what I mean bad financial turmoil, it's not that the companies don't get the money. It's that the lending documents or the investment documents themselves violate either state or federal law. And the harm that it causes is it trickle down into the shareholders, because the shareholders are the one that suffer. And we believe that at least 50%, if not more, of the illegal naked short selling and market manipulation stem from these bad financing deals, because all these financing deals deal with some sort of stock conversions at discounts to market, Rule 144 holding periods over 180-day period. Everybody knows the stock is going to come and hit the market. So it fosters an environment for these very astute hedge funds and broker dealers to go in and start possibly legally shorting the stock. And then when they see how much they're able to drive the price down, some participate in illegal shorting. So, well, the way I look at it is this way, is Wes rains down fire and brimstone on these people. I drill from underneath and pull the rug out from under them, or the floor collapses. And, Wes and I have talked about this, and, we approach these things, these cases from two different aspects. I'm looking at it from an extremely grassroots, and I drill my way up. And Wes takes the 20,000-foot view with clients that can afford to hire share intel and others to accumulate the data. And when he has sufficient data, then he rains the fire and brimstone down on them. So we've only represented public companies. And the way I look at it is, as we represent public companies, we're representing their shareholders. And we started doing this in 2015, 2016, under a state usury law in New York. And we considered that some of the aspects of these financing agreements, whether you're on NASDAQ trading or OTC markets trading, that the conversion discount there's a valuation that has to be included in the interest valuation for usury under state law. And there's several states that have criminal usury laws, like Florida, California, Massachusetts. If these discounts exceed the rate of interest you're allowed to charge, then those states void those contracts, which means if the contracts get voided, there are no more conversions, there's no more dilution, and possibly it also traps the people who've shorted or naked shorted the stock because they can't get any more stock out of the issuer. So I always view this as protecting the shareholders. So when we represent an issuer, we're actually also through the issuer representing the shareholders. So I had my head beat down through 11 court cases in the Southern District of New York, saying that the conversion discount is not interest. I said it absolutely is, because it guarantees them repayment on the loan. They can keep converting. It's called a death spiral. You can Google death spiral funding. A lot of companies, whether you're a NASDAQ, New York Stock Exchange, there's some sort of kicker in the most financing agreements that allow them to keep adjusting and converting discounts against the current market value. So you could have a dollar trading price, and after a couple of conversions, they apply their discounts. You're down to 50 cents. Well, now they can apply their discounts to the 50-cent stock price, and they just keep taking part of their loans and keep driving the price down. But for our conversation, we've always recognized that the brokers who represent the lenders are in a position to jump out into the market before the stock is available, before the lender converts it. And that becomes a hotbed for market manipulation. All their friends, all the brokers know, because it's public filings when you take these kind of transactions, that the stock is going to hit the market 6 months from the date the transaction signed, because these guys aren't going to wait. They have no intent of investing in the company. This was just a very clever way that a lot of clever attorneys were able to draft these documents to guarantee a return on their money, plus a 20, 30, 40, 500% profit. And we just thought it was unfair. So some of our clients decided that, you're right, Mark, and the judges are wrong, let's appeal. We go to the Second Circuit Court of Appeals. We argue one of our cases called Adar Bays in front of the Second Circuit Court of Appeals. And they said, you know what? You may be right, but we're not going to tell our 11 lower court judges they were wrong. So we're going to punt this, because it's an issue of New York state law and legislative interpretation, to New York's highest court, the New York Court of Appeals. So now we have a whole new briefing schedule. In fact, a couple of the toxic convertible note lenders even filed amicus briefs saying, oh, no, these are investments. These don't fall under the usury laws. Well, the New York Court of Appeals ignored their briefs and found that what we said to the two issues, that yes, a conversion discount is interest under New York law, and you must use that as a usury calculation. And that if the transaction exceeds 25% of interest, it's void ab initio, meaning you get nothing. The loan is canceled. The courts are directed to cancel the transaction, and there's no equitable remedy. So they can't even get their money back if you still owe them money. These are things that we've discussed, Roger, in the past in some of your situations. I've had lengthy discussions with Wes and Alan on this as well. So once we had that decision, miraculously, the 300 toxic convertible note lenders never filed another lawsuit to enforce these transactions against our public company issuers. So I thought one day, well, wait a second. So for the companies that have already been victimized by this, how do they get their money back? How do the shareholders get the relief? How do they get their equity back? So fortunately, there's a federal statute called RICO. And one of the RICO aspects is the collection of an unlawful debt. And that threshold is 50%. So if it's more than 50%, you have a RICO claim, which means you can bring a RICO claim. It's a much simpler RICO type of claim than what West deals with. West deals with very complicated RICO claims. So ours is very simple. You have an enterprise, it's engaged in unlawful lending. You have a manager of the enterprise or a couple managers of the enterprise. They're responsible because they direct the enterprise. You sue everybody on that side of the V. And we just had another halfway landmark decision where we we beat back a motion to dismiss by a toxic convertible note lender on a RICO claim, allowing us to move forward on the RICO claim. Well, obviously that convertible note lender settled very quickly with our client. And that's what happens with these types of litigation.
What state, Mark? What state was that in? I forget. It was.
That was New York State. That was New York State.
Okay.
It was federal. It was a federal court case, Southern District of New York.
So Mark, I'm thanks for the intro, and I'm going to jump because I want to make sure we get into pieces. But I think that's a great. If you could just add one extra thing, how did you get involved then with what you're now doing with FINRA, MMTLP, like, because that then obviously is the next step, and we're going to be talking about that more today as well.
Yeah, sure. So I've been following the MMTLP debacle. That's what I call it. And I reached out and had a conversation with John. I was introduced to Wes by you, and we were talking a little bit about that. I became very interested in it. I looked at it, and I was watching the lawsuits from Rosa and Hoffman and a couple of others, and I knew you just couldn't sue FINRA, and FINRA would be dismissed out of those cases because they have immunity. And I was thinking that it seemed that there was a hashtag, release the blue sheets. So I did some more investigation. The blue sheets provide a certain amount of data that would help a community who's been harmed. So one of the shareholders were referred to me. I spoke to the shareholder. He wanted to try to do something in order to help find out more information on what happened. Because really, other than John's concise history of what's going on, there's relatively no information coming from the government side. Even though they've asked nicely, they've tried to go the political route, and I think they're just starting to get traction with that as well, if I'm correct. But I knew that there was this, and talking about obscure rules, John, that they were allowed to register those shares through FINRA. There's an obscure rule in New York which allows for pre-litigation discovery, and that's really used for identifying a party, so you know who to sue, and what's a very broad definition of to amplify the pleadings. So we brought in action under this obscure rule. The court signed the order to show cause based upon the papers we gave it, ordered FINRA to either oppose it, not oppose it, but scheduled oral argument originally for May 30th, which is the Tuesday after Memorial Day. I got a call yesterday from FINRA, and they've asked for some more time because they appeared to want to earnestly try to resolve the turnover of the data. So we have calls with them coming up, but I'll talk about that a little bit more. That's how I got involved.
All right, awesome. So hopefully everyone's up to speed with everyone who's on this call right now. And I do want to say one thing as well, because when Mark's talking about toxic loans and the whole idea of basically what can happen with death spiral financing, what is really important for everyone really to hear, and I know everyone kind of knows this anyway, there are good bankers, there are not so good bankers. There are good CEOs, there's not so good CEOs. There's good lawyers and not so good lawyers. And in the same way, there's good lenders and not so good lenders. And a lot of it comes down to the agreements. And we obviously had our case where we were able to then speak with our lenders and say, look, there's different ways we can structure this, which makes it a good debt. There's ways we structure this, which is not such a good debt. And because they basically also saw the same as us, which is like we can see how much the company's been impacted, we ended up getting to a settlement which allowed us to convert it into a good debt, right? And I think this is something that all CEOs, all investors shouldn't really just educate in. It goes both ways, right? That all money, basically, whether it's equity, whether it's debt, can be good, bad. It's all in the way that it's structured and who it's coming from. I want to basically break everything we're going to share now into a simple structure of 5 things, where if we actually look at it from who has potentially the power to make the biggest difference, and what's really happening or not happening at each level, and then basically where the developments are. Number 1 is the regulators themselves. Obviously, if you had regulators that were basically stopping illegal action from happening, we'd all be a lot happier, right? So there's reasons why maybe they are or aren't moving at the speed they're moving in other areas. The second one is the CEOs, the companies, right? So that's where I come in, as where John started from as well. We do have a power to make a decision. Why aren't more CEOs doing more? Why have I become a lot more quiet now than I was a month ago? There's big reasons for all of this. And even how do we even explain this, talk about it? I want to get into that, why that is. After that, you've then got basically, obviously, the lawyers themselves who know how to move things forward in a court of law, because bad guys aren't going to just become good on their own. And then after that, you've got obviously the retail investors, all investors. And finally, you've got the government that oversees the overseers, right? So that's Congress, right? That's the White House. And there's obviously a lot of movement happening there first. So let's go right to the beginning, which is where we actually start at the top and say, okay, well, regulators, let's not get into why they're not doing what we hope they will do, because we're going to get into how it's possible they might start doing some of those things. And let's get into how companies like myself as a CEO, John, how we can hire UWES, share intel, start tracking data, and how everything has to be data-driven in order to be able to win in a court. And do you want to share, Wes, just like what you've been finding out, over the last couple of months, and where the trail is heading in terms of where this manipulation appears to be taking place and how it relates to what's going on overseas?
Yeah, I think this is a general statement. So just to give everybody a 30-second education, the Depository Trust Corporation, holds in street name, as we call it, the shares for most brokers, right? So that has an audit trail. So that's one set of data we look at. That's share intel. Then there's another set of data for ex-clearing, okay? Well, you can't get ex-clearing information, in the public domain, but we believe there's more going to ex-clearing than there used to be. So that's another place that shares are undelivered shares go, in our view. There's also fails abroad in Canada. Most of the entities in New York have corresponding subsidiaries in every major country in the world. So Canada, London, other places. So what we're finding is the number of shares coming from other countries is staggering. I'm going to give the audience something to go look at. Go look at EU number 9092014, which is a mandatory buy-in rule, okay, for the Europeans. There's a petition that was filed in 2022 by a group of Germans. It's petition number 0775/2022. It involves all EU countries. It's basically saying, hey, you people in the European Union have to stop these fails to deliver. If you go look up, and I encourage every listener to go look up, you can get it, it's publicly available, at least now, in some form. I'm not saying it's accurate, but it seems to be accurate because it's being published by the regulators or by the clearing firms. Go look up what Clearstream has as fails. Go look up what Euroclear has as fails. You're going to see it's massive. The number ranges from 27 trillion to hundreds of trillions, okay, depending upon how you calculate it. So what we believe is going on, and we're in the process of looking at, we know many clients that we have, I'm not going to get into detail, are having shares originate over there in European countries. And incidentally, there's naked shorting is not illegal. There's two exemptions over there. One is similar to our exemption, bona fide market makers, but the other two is basically if you're a European broker and you register and you're also trading U.S. securities, then naked shorting seems to be okay. So we have lawyers in Ireland and other places that we're working with to really track this, because what we believe is happening is it used to be most of the trades went through the DTC and went through exchanges. Now most of it's off exchanges, in dark pools, et cetera. And then add to that, it's coming from abroad versus here. I believe the reason for that is it makes it harder to track. The rules are less stringent in these other countries. And ultimately, though, if you want to look at the totality of the carnage that's been inflicted on a company, you now have to expand your due diligence to include that, okay? Because it's significant. It's significant. And I am speculating, I don't have evidence to prove this today, but we're going to get it, in my opinion, that ultimately that's a bigger role than it used to be in the naked shorting failure to deliver securities. So the failure to deliver securities is not only massive here in the States, it's massive in the world. And so this is turning into a global problem. Go to that petition that I referenced, and you'll see that it's massive in the European entities also.
Hey, Wes,
just a quick one. I'll come to you, John, in a second, but just on this point, because Korea set up last year a naked short selling market manipulation team that has uncovered so many different cases, and the vast majority of them happen from overseas, right? Because basically the international players know how to hide things in different ways. And John, this was one of the things you learned very early on, was just how much, how it even changes in terms of what FINRA, what SEC, what they look at and where they look for it as well. Do you want to just share your journey and what you've been seeing around this area as well?
It came to light for me back in 2014 when if you're a NASDAQ company, every 2 weeks you get a short report that's generated by NASDAQ. And it was told to me when we first listed on NASDAQ that was gospel, There is no such thing as naked shorting. None of that happens. It's, every share that is shorted is borrowed and accounted for. Well, we went from 3.2 million shares short on October 1st to 1.2 million shares short on October 15th. And it was just an impossibility that every share bought was a buy to cover, because in that time period, there was only, about 1 million shares traded in our stock to begin with. So I called up my NASDAQ rep and I had them, basically look at FINRA, and FINRA came back and said, well, the 2 million of those shares were moved offshore. They're still short, but they're not in our purview anymore. So therefore we can't report them. And I'm like, okay, so what you're telling me is that there's 2 million shares that exist offshore that nobody knows about other than me and FINRA. And so now all the algos and all the people that search for companies to short now are looking at us and saying, oh, there's only 1 million shares short here. Maybe we should put a short on. So that was the first enlightenment for me that happened. So, and then just so happens right about the same time, some shareholders called me and said to me, hey, you're being traded over in Germany on the Frankfurt exchange. You need to delist. Well, I spent about a month trying to do that, and it's an impossibility as a U.S. security. So that was my first foray into that. But I wanted to add something to what Wes said. All of these actors that are overseas that are doing this, you would think they'd be overseas entities. Well, surprising is most of them are not. They are subsidiaries of U.S. actors that have set up shop in those basically domiciles in Ireland and UK and Germany and France, and are basically wholly owned subsidiaries of the same bad actors that are here in the States.
Good
and they're
point.
there because the regulations allow you to naked short.
Yeah.
So that dynamic that the SEC knows about and FINRA knows about is not being talked about at all, and it's not being policed whatsoever.
So there's two elements here around. Okay, so now you get the measurement, you see where the data is. Okay, what are the next steps that then take place? And there's two big pieces to this. The first one, which Wes, I'd love for you to comment on, or at least give whatever thoughts you're allowed to give on this. But basically, when you sat with us and our board, our team, and said, okay, this is not a month by month thing. This is this is going to be years. This is my experience. And the very first step, which is really understanding what is the damages model, how much actually has the company lost as a result of this, the due diligence on all the data, and knowing that the data only gets you so far, and then you basically put in the actual case, and it's after that you get discovery, which then takes you, beyond the curtain to see that, and then you're going back and forth. And you were saying often because you have multiple, broker dealers you're working with, you actually have different people who might sell at different times, because they generally in the past have seen this, and probably even in the present, as just the cost of doing business. Is right. Well, how much is it going to cost us, right, to actually settle on this? And we're obviously getting all this news from you, where we're like, okay, we're like things, but then it's like, well, what can we share? What can't we share? And especially, as you said before as well, second thing, every single company in the past that you've been working with in one form or another ends up getting investigated by the investigators. And it's like, well, what's happening there? Like, shouldn't they be helping the companies rather than basically trying to find fault with the companies themselves? And then, of course, when that happens, then every CEO, including myself, has to make decisions. Okay, do I keep on going at the attack, or do I now need to be quiet? And that is one of the most difficult things to really work with, right? Because that's obviously, a big part of the decisions you need to make of how do you protect the company, depending on who it is that's actually after you. Do you want to just comment on both those two as a lawyer for other CEOs who are watching right now as to what they should be thinking, what they should be doing?
Yeah, so I think first the company has to decide, are they willing to stay the course? Because why undertake to look into this unless you're going to stay the course? So you got to decide you are or aren't. That's a key decision. And I was just having a conversation with a company I'm not going to name a couple of days ago with their lawyer, outside lawyer, and they said, well, gosh, we're going to need to get more money from Wall Street. I'm not going to sue Wall Street. I'm like, well, I guess what's the age-old adage? Keep your friends close and your enemies closer. So, each company's got to decide that. I submit there are good bankers out there. There are good people to invest with. We have a list of bad guys we've accumulated over the last 22 years. It's a pretty lengthy list. So my suggestion is, I say a company has a fiduciary duty, the board has a fiduciary duty to the company to investigate this. We've written on this. Alan Pollock has written an extensive memo on this. It's a fact. So I submit shareholders are going to revolt ultimately against the company themselves if CEOs don't do something. You can't sit by and allow your company to get raped and do nothing. Okay, that's a breach of your fiduciary duty. First grade law. I mean, first grade law school. So I think they have to do something. So then the question is, what is that? And what's happened in this space is it's become much more complex to do the due diligence because the bad guys are getting smarter. And frankly, I don't think the regulators are helping us. I'm not saying they're helping the bad guys, but they're certainly not helping us. So at the end of the day, I will tell you that let's just take, MMTLP and John Brda and his group. What I expected to accomplish in 2 or 3 months is going to probably take twice that long. And John's in that with me and his partners, because we're getting stalled at every angle, including some other things that we used to get, customarily. And that's fine. Ultimately, we'll get there because the mission is to do that due diligence, figure out how the company's been harmed. And typically a good portion of that harm occurs by virtue of injecting these shares and this false information into the marketplace. It's really simple. It's supply and demand. If you're injecting artificial supply into the marketplace on a given day, company trades 1 million shares and you're going to make sure it sells 3 million shares, but 2 million of it sold electronically and nothing's delivered. Well, of course the stock's going to go down. Any focus group we've talked to in these cases, any jury, we've never got to a jury because these cases is settled for the most part in the last 15 years. So at the end of the day, it's easy to understand. So I think the company, to uphold its fiduciary duty, but also figuring out how they can survive, needs to align itself with good financiers. They need to be proactive. They need to be tracking their shares daily. They need to be figuring out other mechanisms, whether it's a stock dividend, whether it's what John Brda did, where they attach a preferred share that's spun out into a private company, or things like that to ultimately stop the cakewalk at church or synagogue, like I've just said many times, and count the shares. And you're going to be shocked. If you look at the contingent liabilities on the balance sheets of all the prime brokers worldwide, if Congress did that and audited that, it would shock their conscience, okay? It would shock their conscience. Those contingent liabilities are mark-to-market value of securities that have been undelivered. And don't forget, whatever they are today, that's been manipulated down by 500%, okay? Because it started at $20 and now it's $1. So the contingent liabilities on their books today are $1, not $20, which is when they sold it. So for God's sakes, the contingent liability before, but for their bad acts manipulating it down, it's a self-fulfilling prophecy. It would be enough to melt down the entire economy of the world. This is my view. This is my view. So I think summary version, they have to be proactive. They have to figure out how to align themselves with good financiers. They got to track their stock. They got to, it's self-serving. They got to hire our team to do the due diligence, and all the consultants that we represent and all the people we're aligned with, whether it's Mark, whether it's Rob Shapiro, former Secretary of Commerce, the whole list, and basically uphold their duty to their shareholders and don't allow people to rob their company by issuing counterfeit shares. That's really what they're doing. They're issuing counterfeit shares.
And for every CEO and for every company out there, and I think this is why it's so important with John, just the fight that you're on as well, and we're obviously experiencing this, Wes, too, the fact that when you actually go public and you actually do take basically legal action, they don't go away, right? Like they actually, because we're tracking our shares every single day, right? And just seeing that basically it isn't like suddenly they go, oh, okay, well, there's something going on here, we'll go. They're like, if anything, it doubles down. If anything, it gets, so you're actually going to be attacked even more so. But at the end of the day, the damages which you can go after if you commit to it can be multiple times the market cap of the company, because basically that's how much they've actually destroyed value off the back of that as well. And that's where I get a lot of heart by seeing the way you've been working at this was long-term enough that you actually are, you had those kind of results as well, which is something, exactly. But it has to be the long-term. It can't be where it's
that's
like.
Correct. That's correct, Roger.
Yeah. So moving on from the fact that, like, we've talked a lot about what company CEOs can do and what they should do, right? And I know there'll be more who will be reaching out after this. Let's talk about the retail investors. Do you want to share, or can you share, Mark, at this point that you are taking these actions at the moment? Obviously, a lot of people are seeing those actions as well. What are you hoping for or expecting for from FINRA? And what's your ideal outcomes or where you see things could be as we kind of move through this year?
All right, so two things with that, Roger. First, we drill up. So we're starting at the most fundamental, basic level. We want to collect the information. I had a feeling the only way to do that is by court order. I know that Mr. Hoffman tried making a motion for releasing the blue sheets, but I believe that FINRA got dismissed out of that case. So his case is still pending against the brokers. But, I'm kind of like a slow and steady kind of guy, right? I believe that we have to slowly peel the banana skin off, skin by skin, until we get to the juicy stuff in the center, right? Going through this special proceeding in New York, my sole focus right now is to get the data that my client needs to identify the wrongdoers and support a lawsuit. So, but with that, I kind of take my clients and the overall community's sentiments to heart. And I was actually just in Arizona the last 2 days, and I met with the MMTLP Arizona contingency. And let me tell you something, representing issuers and hearing from their shareholders in all my toxic lending cases, how a company goes from a $6 stock to 0.003 in 6 months. They're losing their life savings. They lost their the kids' college money. I heard the most gut-wrenching stories about these shareholders who got caught up in what I am looking at as an administrative snafu at some level. I don't have the information that Wes has. I don't know the history as well as John does, but what I do know is there is something nefarious going on here. And I believe that the first block that we pull out of the pillar is getting either the blue sheets or other data from FINRA, and I'm not going to let go. I have them by the leg. Sorry to use that analogy, like a pit bull, but I'm not going to let go. And my track history shows I don't let go. Whether it's a toxic lending case, a dealer registration case, I'll take it up on appeal. I'll take it to the highest court where we have 100% success rate in all of our appeals. I'm not saying it's going to go there, because my initial call with FINRA is that they want to try to resolve the data turnover. And that's a call that we're having later this afternoon. But, whether it's the MMTLP community or the GTII community or any of the other communities that have been bitten really hard by this, by short selling and naked short selling, I kind of like to temporarily step in their shoes and feel what they're feeling, because it gives me more drive to do what I do. And the 12 stories I heard is just a very small sampling from the thousands and thousands. I even heard a friend of this group committed suicide because of this. And that just makes me more, more determined to do what we do with the slow and steady path to get this first piece of information, which, if we get, is going to open a Pandora's box. And I'm pretty confident, because we've already assessed what their arguments could be for not releasing it, and we don't think they hold much water. But then again, if the court doesn't agree with us, there's always the appellate division in New York that consistently has sided with the people seeking the information, not against the people who are trying to prevent the release of information. So, it's just the heartbreaking stories. I attend Twitter Spaces calls. I try to stay very neutral. What is the end game, you asked? Honestly, I can't answer what the end game is at this point, because I don't have the data to lead me to the direction of what the end game could possibly be. Would I like to see them open trading and have the markets naturally resolve this according to their criteria? yeah, I would love it because everybody, people thinks they're owed $4,000 a share or $10 a share or whatever. More power to them. I hope they get everything they want or they expect out of this. I'm not in the position to settle for them. I represent one client. I'm going after data. Once we have the data, that may change in some form or fashion. I don't know. May team up with Wes and Alan, may team up with other firms. But I do want to speak to one thing. And it's what you mentioned earlier, Roger, something that you've experienced. I've dealt with dozens and dozens of CEOs that are worried that if they pick up the fight, they'll never get funding again. But like you said from the very beginning, there are two types of everybody. They're the good people and the bad people. And unfortunately, the bad people have established a stake in the overall market. So say, hypothetically, GNS has 3 or 4, funds that are in there. Say they're unregistered dealers, but those same funds are in 40 other NASDAQ and New York Stock Exchange stocks. So your firm is a microcosm of a bigger problem. And as Wes and John were alluding to, I personally think shorting should not be allowed because that right off the bat creates an uneven playing field to the retailers, right? And then just like you see how much money you can make on shorting, well, I can make more money if I naked short. Or there are people who don't want to play by the short rules and will go in a naked short. And they kind of disguise themselves. They fit right into the volume. It's very hard to peel that banana back. So as we're drilling up and Wes is drilling down, I really suspect that this is going to be a multi-trillion-dollar issue that's going to rear its head in the next 6 to 7 months. And I'm not sure what a resolution will look like. Maybe the resolution is trying to make people whole, open the trading for MMTLP, but at the same time change the rules by which these registered brokers play by to make it a more even playing field. Because retail, I'm sorry, you're screwed. I don't care what anybody tells you. You are playing upstream against people who are sophisticated, have algorithmic programs to do their trading that can make split-second instant decisions faster than your brain and your finger can on the keyboard. So,
Mark, I'm gonna cover two key
we got
things.
8 minutes, Roger. I have to be off in 8 minutes.
Yeah, exactly. All right. So here's the two things. I'm gonna come to you, Wes, and I'm gonna come to John. Let's talk about two things. The first one being, okay, what is the end game, right? From your view, in the case like, for John or in Wes, the actual specific cases, including, Genius, what you see as the end game, but also given that the banks now have been crying out and saying, look, we shouldn't be letting this manipulation happening, right? Given that we've got, White House, Congress, basically now discussing whether or not there should be some kind of ban on short selling, given that they've got all of this activity that's going on right now, I'd love to hear from both sides. And I want to qualify one thing just from what Mark said when he says retail investors are screwed. They're screwed with the existing system, right? It was actually this week that Upstream Exchange now is allowing US investors to move shares on Genius shares from New York Stock Exchange onto Upstream Exchange, where you cannot be shorted, right? It's all blockchain based. And if you want to shift it back, boom, like straight away, shift it back, sell it on NYC if you want to as well, right? So basically there are new paradigms which actually have moved in the last couple of months as well, where it needs almost a systemic shift in the future. But Wes, what would you say in terms of what you see for Endgame specifically and generally based on where things are going right now?
There's several components to the endgame. First and foremost, nearest and dearest to my heart is compensating the clients that we represent for the carnage that's been, committed against their company and the shareholders. Number two, you're going to have to see major reforms by the regulatory agencies, okay? And that's not going to happen until ultimately everybody sees that this is true, that it's happening, and it exists, and it's threatening our entire, system, our capitalistic system, because that is true. But that isn't what most people, say today. So it's about educating the public over and above the Reddit group and everybody else to see that this is real, it exists, and it's got to be solved or we're screwed. Number three, we've got to have Congress. I think about, Tucker Anderson, who we're dealing with, who's an attorney for Congressman Pete Sessions. There's now 17 House offices on the MMTLP trail. They're going to be meeting with FINRA, and ask questions. Now, where's that going to go? I don't know, but I applaud it. Okay. So everybody on the MMTLP community, keep writing your congressman and keep it up. And everybody in the Reddit community, the Superstar, keep it up, because the more people that jump on the train that we're on and expose it, the more people are going to see it's real and that the people on the side of Wall Street are lying to them. Okay, that's simple. And so that's piece 3. Piece 4 is ultimately there's going to have to be an entire reform system, whether it's blockchain or whatever, to eliminate cheaters. You cannot allow our markets to be cheated, or the integrity of the markets are gone. Okay, and incidentally, these idiots, that means the Wall Street banks are gone too if you don't have markets. So what are they doing? Is it a self-fulfilling, self-destruction policy? I guess they don't care. They're making the money now. But ultimately, long-term, it destroys them too. Don't they get it? So at the end of the day, all that's got to happen in order for this to be reformed at some level.
Got it. Thank you very much, Wes. John, going to come over to you, specifically endgame you'd like to see for MMTLP, and then just what you see as the whole movement where you would like to see this all going.
I think first off, I'd like to see some resolve for all of the MMTLP shareholders, and I have no idea what that's going to look like, whether it's trading, whether it's a resolution involving NextBridge. That's all of that is yet to be determined. That's first and foremost. Secondly, along with Wes, I believe that if market reform does not happen, the investing community, particularly for small caps, is just going to die. Hopefully upstream and exchanges like that will start to take off when people will start to migrate because they're just sick of it. Hopefully that'll get traction, but you need, in order for upstream to get there, they need traction. They need people to register with that exchange and want to provide liquidity. So that's a huge thing. Thirdly, I would love to see the bad actors that continue to do this to get more than just a slap on the wrist. For example, GTS Securities, which is fined $10 million twice last week. That's nothing to them. That's how about you forfeit all of your profits and then get fined on top of that? How about that for a solution? Maybe do something with FINRA and the SEC that basically polices these bad actors so that they don't do it anymore. So it's not profitable for them to break the rules. All of these rules we have in place with the SEC and FINRA, certainly there are rules that need to be changed and modified. But even if they were to abide by the rules that are in place, 90% of this would be gone. So it's a huge problem, and hopefully we can be a catalyst to fixing that problem, because I think it's an end game if we don't fix it.
Final thing, one word from everybody, because John, like when we met, I could see you were several years down the journey from where we are, right? We're just getting started, but it's an inspiration to see how you completed things with Torchlight, and we definitely are on that path. We just had this week the EGM for the voting, the spinoff. So all that's all in motion right now, but it basically is the long-term game. However, the fact that so much has changed in the last couple of months in terms of Congress now getting involved, in terms of the media being more involved, in terms of the number of commentators that are actually sharing about this, and of course the retail investors keep on growing in size. Are you neutral? Are you pessimistic? Are you optimistic that things are accelerating in the right direction? Mark, what would you say?
I think there's a lot of fatigue going on. I know maybe some of the professionals have a little fatigue. I know that the retail communities, the several retail communities that are involved in this are experiencing some fatigue. But Wes can appreciate this because we both play guitar. Most amplifiers go to 10, Marshall amplifiers go to 11. Now's the time to go from 10 to 11, get louder, put more pressure on, because they're starting to become chinks in the armor, and we're making some headway, whether it's through my proceeding or what Wes and John do in the near future, what they do with Congress or whatever. Now's the time to keep up the pressure. The community has been great, and they need to keep it up. That's what I think.
Awesome.
I've got to run, guys. So I second Mark's motion, and whatever everybody's been doing, double it. Keep it up. We're making more progress than I've seen in 21 years. That's a historic fact, okay? And I'm an eyewitness to it all. So we must keep it up. If we love the country we live in, And if we love honesty and integrity, we must do it or we're screwed. That's
awesome. Thank you. John, final word from you. Pessimistic, optimistic?
I remain optimistic, and the reasons are threefold. One, that's just the way I am. My resolve is steadfast. Wes is as well, and his entire team. But more importantly, everybody who's an MMTLP shareholder has joined together and are going to fight. And we're not going to stop until there's a resolution, which is going to be great for the MMTLP shareholders and great for the market in general. So that's
awesome.
mine.
Thank you all very, very much. I'm optimistic, and especially with all of you guys behind this movement, I think it's incredible. Thanks everyone who actually joined as well. We'll catch up with you in the Q&As and on Twitter afterwards. Thanks a lot, guys.
Bye-bye.